here today with Elliot Refson from Jersey Finance. Elliot, thanks so much for joining us. Excited to have you on the show. Why don't you start off? Kick us off with your background, and you're based in Jersey. Kind of tell us, how'd you end up in Jersey too?
My background's running hedge funds. I set up my first hedge fund in '93 in Hong Kong under the Creswell banner. In '96, the parent company went into liquidation, so I was without a job. So I moved to Bloomberg in London, in New York, to help design their technical analysis charting package. And then I left Bloomberg in 2006 to go back into the markets. The guy that I'd been working with in Hong Kong at that time was running a fund of funds in Jersey. So I moved to Jersey to set up my second fund, which I did. We sold the company in 2012. At that time, the European legislation, AIFMD, had just come into force. So I approached Jersey Finance to see if they had any people interested, as I was looking to set up a management company for house managers in Jersey. And they said, no, but McKinsey had written a report suggesting we attract hedge funds to the island. Would you help us do that? So I did that, and I still am involved in that now. But fast forward to today, my role at Jersey Finance is head of funds. My remit is to help shape the product offering of Jersey PLC on the one hand, and then the other side of my job is to go and tell people what that is.
Awesome. Very cool. Well, I'd love to hear more about kind of just, get into it specifically, why Jersey, specifically the Channel Islands as a jurisdiction, and we can get into some other aspects of kind of what you're focused on.
So Jersey is a crown dependency of the UK. We have our own government. We set our own taxes. Jersey set out many years ago to be the gold standard of jurisdictions. And if you go back 20 years, it was probably very expensive and quite difficult to do, do business in Jersey because of the standards that were set. But if you fast forward to today, with the global standardization of regulation, we've maintained our standards while other jurisdictions have had to play catch up. So these standards are nothing new to us. So in Jersey, our base case is tax neutrality and stability. That's political stability, fiscal stability, as well as a minimum change outlook from a legal regulatory perspective. That's underpinned by world-class infrastructure. For example, we have the fastest broadband in the world, and we have a very deep expertise. We've got more than 50 regulated corporate service providers and over 40,000 people who work in our industry.
Very cool. And now when it comes to Jersey, so, here in the US, like we frequently see, let's say like Cayman funds, BVI, kind of, give us the pitch for Jersey. What makes somebody want to, locate their fund in Jersey or their business or jurisdiction?
Our proposition to US managers is the fact that Jersey is outside of the EU. It's independent. It's outside the UK. We are pretty much our own country. When a US manager wants to raise money in Europe, they have to comply with the Alternative Investments Fund Managers Directive, or AIFMD. So they have two choices. They can either set up in a onshore jurisdiction, such as Luxembourg or Dublin, in which case they're on the hook for this full spectrum of AIFMD, which, by the way, includes disclosing manager income, how much the manager earns, or they can come to a jurisdiction like Jersey, which in essence has a form of AIFMD light, which is called the National Private Placement Regime. So because it is less regulation, it's less expensive, it's also fast, it's a market, and it's certainly less expensive on an ongoing basis. So via the National Private Placement Regime, the US manager, through his Jersey fund, would register in each individual country to market his fund there. But he has to do that under AIFMD anyway. And the reality is that, and this is the EU's own statistic, only 97, only 3%, sorry, only 3% of managers market in more than 3 European locations, which actually means that 97% don't. So those jurisdictions where most US managers raise money are the UK, which is no longer in the EU. It's Switzerland, which is never in the EU, and it is the Netherlands, which is in the EU. So using Jersey rather than an onshore jurisdiction is a great proposition for US managers. It's cheaper, faster, more efficient. It's the reason we opened our own office in New York in 2019. And we're seeing an increasing number of managers using Jersey for that reason.
It's interesting, Elliot. So give us a little bit of the background, kind of why the jurisdiction, but maybe getting into specifically digital assets, why Jersey is a from a jurisdiction from that lens, and maybe give us some history as to kind of how they came about.
There's one factor that sets Jersey apart from many other jurisdictions. And just as an aside, I've had some experience of this because a few years ago, I took the regulator to the US with me. And we had a number of meetings in New York, and the people we were meeting with was trying to wait in the regulator, what's this regulator doing here? And the reason for that is because in the US, you only see the regulator when it's telling after you with a big stick.
Right.
In Jersey, it's a very small island, right? You don't have a cup of coffee with the regulator. You talk to the regulator about what you're going to do before you do it, and then there's no surprises. So there's one key factor within Jersey that sets us apart from many other jurisdictions, and that is that our industry, the service providers, through an organization called the Jersey Funds Association, which is the trade body, which I'm a committee member of, get together with our government and the regulator. And for many years, this has led to very highly successful innovation. So to answer your question, from the starting point back in the day, that Jersey would treat virtual assets as it would any other asset class, it was exactly this approach which led to Jersey regulating the world's first Bitcoin fund in 2014, to apply an AML control framework for virtual currency exchange in 2016, and ICO guidance in 2018. And they're just a few of the milestones along the way. But what the factor of talking to each other and wanting to innovate do is put Jersey's innovative edge and core market competencies on a very much a converging path.
That's really cool, actually. It sounds like maybe there's like less bureaucracy in Jersey, if you will.
Yeah. So, I mean, if you want to sort of carry that forward, just, because around the digitization of real world assets, in 2023, in conjunction with Jersey Funds Association, I raised a trend towards digitalization of real world assets as an existential threat to our funds industry in Jersey. The reality is that if we were not towards the front of that curve, another jurisdiction would be. And I'll give you an example of that. One example of that is hedge funds in Bermuda back in the day. All the hedge funds were congregated in Bermuda. Came along with a better, cheaper product, and they pretty much moved overnight. And that was the start of the hedge funds in Cayman, which is still dominant worldwide. But to go back to the real world assets, I raised it with the Jersey Funds Association, government and industry, government and regulator, and it was decided between these bodies that the way forward was for the regulator to issue two guidance documents. The first one would be an update of the 2018 ICO guidance, and the second one would be a real world asset guidance. And the idea of this was that these documents were aimed at recognizing the innovative potential of blockchain technology and to promote Jersey's competitiveness in the space. And to do this by clarifying the JFSC, which is our regulator, their expectations in relation to this technology. And we released those guidance notes in August this year.
Very cool. And with kind of I guess that's kind of a good intro to kind of let's talk about the tokenization side of things. Like what you guys seem to be very the team in Jersey seems to be very forward thinking when it comes to digital assets and tokenization. How'd you get there?
Well, let's start with how the market got there. So, in order to answer that, let's look at the question: what is digitalization in real world assets? So, in essence, digitalization of real world assets refers to the process of converting tangible or intangible assets into digital tokens that can be managed, traded, and stored on the blockchain. And if you put that in context, you'll see it's a natural evolution of investments, which pretty much began in the US with the introduction of railroads and industrialization in the 1800s. To facilitate the transactions around that, we saw stock exchanges being introduced to be able to support large-scale investments. Um, Fast forward, the first mutual fund came in 1924. You had modern portfolio theory in the 50s. And more recently, you've seen the rise of ETFs and passive investing. And the digitalization of real assets, putting these on a blockchain, um, is just the latest evolution of the investment management space. Um, just as any of the previous iterations that I mentioned earlier. So each era has brought new economic trends and investor behavior.
That makes sense. And so from your team's perspective, it makes sense to like let's get kind of ahead of this trend before let's kind of be like kind of get like first movers advantage. Is that kind of the
Yeah,
thought?
absolutely, yes. As we'll come on to talk about the way in which we've gone about this, it's actually very much home ground to us.
Elliot, just from the tokenization in general, obviously the market globally, there's a lot of innovation. Obviously, you guys are on the cutting edge of that, which is
Yeah,
fantastic. From an investor point of view, just curious, where do you see the investor sentiment? Obviously, in tokenization, everything's going to be built in real time, right? People talk about
yeah,
liquidity. It's not exactly there yet. There's no secondary markets yet. That's the promise. I think we're all in line with what that will look like. There's a lot of operational
yeah.
efficiencies, those things like that. I'm just curious from the investor side of things, though. What are you seeing? What's the feedback that you're seeing today in real time, and what's the perception kind of going forward there from your view?
I mentioned earlier that each era has brought in new economic trends and investor behavior. Um, what we've seen over the past 5 years is a very clear trend from investors to pull back from investing in collective investment funds and to start investing in their own vehicles or co-invest vehicles. So within Jersey and within most jurisdictions, you've seen a 50% decline in the number of collective investment funds. But if you aggregate the number of, in Jersey, we have a smaller fund called the Jersey Private Fund. If you aggregate the Jersey Private Funds with the collective investment funds, the larger mutual type funds, you'll see that the number of funds has actually grown year on year. The AUM continues to grow year on year. And then if you take corporate vehicles, for example, limited partnerships, the number of limited partnerships created in Jersey in the first quarter of this year was a record. To the end of September, we had as many created as in the whole of last year. And what this trend actually means is that the investors want far more control of their own capital, and they want to do it via their own structures. They're happy to do it on a smaller co-invest side by side with a manager. Um, but it comes down to they want control over their own assets. And that brings us back to tokenization of assets, which amongst other things can help facilitate that.
Oh, that's great. It's very interesting. I guess from a tokenization point of view, what are some of the elements? Some people tokenize things in different ways across the space. I'm curious from a Jersey perspective, how does tokenization happen? Is it pretty much straightforward like most, or is it a unique process? I know you guys have a unique framework, which is amazing from a regulatory point of view, but just curious on the process of setting up a tokenized fund or the tokenization process in general, if you want to kind of explain that from Jersey's. side of things?
Yeah, sure. So let me give you the background. I gave you an example earlier of jurisdictions that don't evolve like when you did with hedge funds. Another jurisdiction came along and took their business overnight. Jurisdictions are businesses like any other business. They're, a barbershop or a lawyer, and they compete with each other. Over the past 2 years, Jersey has won over 400 securitization vehicles from Cayman because Cayman had problems servicing their European clients for securitization vehicles. And this matters, and it's actually very interesting because Jersey treats tokenization in the same way as it would a securitization vehicle. And we have a long history of creating these types of structures, for example, for CLOs and the 50 plus service providers 50 plus administrators on the island are all comfortable doing this. So why that distinction matters is that under Jersey law, because it's a tokenization is in the form of the securitization vehicle, a securitization vehicle is not treated as a fund in Jersey. And that means it's not subject to AIFMD in Europe, for example. It also streamlines the process. So, for example, you only do client due diligence when you create a token and when you redeem a token. You don't need to do it on the transfer of a token, which streamlines the due diligence process. Unlike other jurisdictions, Jersey does not impose limitations on the number of note holders for a securitization vehicle, and some jurisdictions have a very low number. But I think most of all, the benefit that this brings to that Jersey brings to tokenization of real world assets is that the regulator, the Jersey Financial Services Commission, issues a consent to confirm that the structure complies effectively with regulation. So it's a proactive consent, which gives a degree of certainty. In most other jurisdictions, if not all other jurisdictions, your reliance on a legal opinion, which at any point is not yet proven until it is proven.
There's sign off from a
They'll sign
regulatory
off
point of view. Got it.
to say the structure is compliant. That's absolutely correct. And from a Jersey perspective, we can actually issue tokens directly to retail investors, provided the risks are adequately disclosed. But it's far more normal to go through an aggregator. And then, of course, Jersey offers tax neutrality.
That's really interesting. So no AIM can be not really considered a fund. It's a securitized vehicle, and
Yes.
it could potentially go for retail investors based on certain criteria. Is that correct?
Yeah, as long as the risks are fully disclosed, that's correct.
Okay. Very interesting. Yeah, definitely a lot different than others. And obviously the types of investors, high net worth individuals, family offices, what does that look like that you're saying in this space from appetite on tokenization?
Okay, so I think the appetite on tokenization is a fascinating area. Just start with some statistics. In July this year, a survey by EY Parthenon found that more than a third of institutional investors and 2/3 of high net worth investors plan to invest in tokenized assets by the end of 2024. So I think it's probably interesting to take an aside here. So earlier we looked at the rise of tokenization in an evolutionary context. Let's just build on that and explain why most of the heavy lifting to the complete acceptance of tokenization of real world assets has been done. In parallel, the tokenization of real world assets grew out of the virtual asset sector, the Bitcoins of the world. And they emerged about 10 years ago as a revolutionary concept. And, the digital representations of value stored on secure online ledgers at that time challenged the status quo of the financial system. And they faced a lot of skepticism. The potential for innovation has become increasingly apparent over the years. So Bitcoin is now, there are Bitcoin ETFs today. It's now a $1.6 trillion industry. And this sets the trajectory if we go back to doing the same thing with real world assets, because much of the heavy lifting has been done. The advantage real world assets has is that real world assets can be real estate, private equity, listed securities. They're already acceptable investments. So what you're doing is taking existing proven technology and applying it to the new asset class. So on that point, Northern Trust and HSBC have both issued reports, and they've both estimated that between 5 and 10% of all assets are going to be digital by 2030. So global assets are somewhere between 275, 295 trillion. And that gives us a figure, say 10% of that.
Yeah, he dropped.
It's a big figure. So, if you look at what we've got so far, what we've spoken about, we've got investors wanting more control over their money. They want greater diversification to new asset classes. The mechanism for them to achieve this is via tokenization. But if you take that 275 to 295 trillion, 50% of that is held by high net worth investors, private wealth, right? Only 16% of that is in alternatives. So there's a huge potential for private wealth to go into alternative investments. So if you look at we've spoken about investors, let's look at the other side of the coin. There's a survey by Calastone which focuses on the investment management side of the equation, and that suggests that 67% of US managers expect to have tokenized offerings available within the next 12 months. A further 22% expect it within 3 years, and 11% within 5 years. So it's only going one way. And if you look at what's going on in the world today, you've got the likes of BlackRock, Fidelity, JP Morgan, Goldman Sachs, BNY Mellon, UBS, HSBC. They're all implementing tokenization strategies. They're moving beyond operational use to offer tokenized products directly to clients. And this shift on their side is happening. And at the same time, you're seeing the service providers, the law firms establishing digital fund groups. You're seeing the administrators establish digital fund groups. And you've got the emergence of platforms to facilitate or white label the tokenization from a practical perspective. If you then build on that, similar to the investment management category, and certainly from Jersey's perspective, because 90% of the assets in Jersey are real assets, you've got the alternative investment category, which is very keen to participate, private equity, real estate. And again, another statistic, the Global Private Equity Report for 2023 noted that, as I said earlier, individual investors hold 50% of the estimated 275, 295 trillion, 60% in alternatives. If you look at what that means, it means that the alternative investment space is looking to this new investor base for a potential $150 trillion of investments. So you've got the investors wanting lithium asset class, the managers wanting lithium investors, and that symbiosis is what's driving it. It's definitely going to go one way. If you look at a website called rwa.xyz, it will give you every single tokenized structure, and it was somewhere around 13 billion. It's in its early phases. We're seeing it primarily in listed securities. So, for example, the bank can take a Berkshire Hathaway share, tokenize it, fractionalize it, so that their clients can have access. That's what we're seeing. We are seeing inquiries coming through on private equity and real estate. But it will start to snowball because of the symbiosis.
Yeah, so that's really interesting. Just the democratization of access to alternative products. There's a demand there, to your point, and that will only increase given the opportunity and where the market's going, which is pretty fascinating. How fast that's happened too. I mean, in this market, which is really interesting.
Yeah, I mean, I think the symbiosis that you're seeing is what's driving it. the fact that it's on the block, the fact that it's all on the blockchain, gives you increased liquidity, accessibility. It reduces costs. It gives you transparency, security. You can be anywhere as long as you've got a PC. You can access it. It gives diversification opportunities. And if you go back to what we were talking about earlier as the evolution of markets, why would this not be the next step? People want control. The trends in structuring are saying people want control. So every way you fit this together, it is something that is, in my mind, 100% the future of the industry.
Elliot, I guess in terms of, what advice would you give for, it's, from our perspective, it seems like Jersey's done a really great job of embracing digital, embracing tokenization. What advice would you give for other governments that, maybe haven't thought about it as much?
Okay, so if you look at the landscape around the world and you talk to people in the space, the thing that you come up against most is the regulatory uncertainty. You've got various jurisdictions who are looking into it. You've got various jurisdictions where you can create structures, but you're reliant on a legal opinion. As I said, jurisdictions are businesses. I think the jurisdiction that provides regulatory certainty, the jurisdiction that has a history of decades in creating these type of structures, is the shop that you would go to. Envision them as a row of shops. You'd go to the one where you had certainty. You'd go to the one that was proven. You'd go to the one where you knew exactly what the various choices were, rather than the uncertainty. And if you flag that point back to any fund manager, from my own time running my own funds, the one thing that you want as a fund manager is you don't want anything that could be a red flag. You want absolute certainty. So that's what the manager wants. That's what the investor wants. And that's what we as a jurisdiction, that's why we set out to be the gold standard. Whether it's by luck or by good management, being the gold standard 20, 30 years ago has put us in the sweet spot today. Whether it's by luck, whether it's by good management, I'll take it. It doesn't matter. We are where we are.
Yeah, absolutely. I think that's great. And I think that's something a lot of governments and jurisdictions could, look at it and use that to kind of make their own improvements. I think just from this conversation, I think there's a lot of things you guys are doing right. And I think that's great.
Yeah, absolutely. To see the innovation happening, for sure. That's pretty exciting.
Thank you.
Awesome. Elliot, well, this has been great. I appreciate you sharing your insights. Appreciate you telling us more about Jersey and walking us through everything in tokenization, the digital world. Thank you so much for the time. It's been a lot of fun. Where could people go to connect with you and learn more about Jersey Finance?
The Jersey Finance website, www.jerseyfinance.je.
Excellent. That's great.
Awesome. Make sure to include that in the show notes. Elliot, thank you so much for the time today.